Alright, so what's up, it's your boy OMG Peeps, and today I'm going to be showing you guys how to use one of the best ICT setups, how to execute it, how to set your targets, how to set your stop loss and all that. So stay to the end of the video and learn something new. Alright, let's get to it. Our analysis, as always, from the high time frame, and the highest time frame at this time is the weekly. You don't have to go to the monthly and all that. You just need to, right now this is the current range we're trading in. We're looking at GBP USD, in case you didn't notice, in case you were tight shit. You can see we have sell side liquidity right here, sell side liquidity, and up here we have buy side liquidity. So what this means is that around this area, on this high, on this swing level, we have orders sitting above waiting to buy, and below this low we have orders waiting to sell, and market makers look at that as liquidity. So in trading, basically you're told swing highs are resistance levels and swing lows are support levels. So those that are selling are going to put their stop losses above this high, and those that have bought have stop losses below this low, and that's liquidity waiting to be swept. Okay, so we are on the weekly time frame. As we can see, this move right here, you can see this move right here, from this low going to that high, we have a break of market structure right here. This is the first break of market structure. We always use the first break of market structure. So initially price was crashing, right? And then as it started going higher, the first swing high that got broken was this one. That is the one that we use as our break of market structure. So I'm going to mark that. We'll mark that as our break of market structure. So after our break of market structure, we have certain PD arrays that haven't been mitigated. The one that I'm interested in most is this one, because this is the order block right after, or right below, a fair value gap, and I'm going to show you what I'm saying in just a second. Let me mark this order block, weekly order block. So that weekly order block is just below this fair value gap, and that gives it more validity, if I may say, to push price higher. That's what I'm looking for, right? So my bias already is I'm looking for higher prices, because we have mitigated this discount, since we have premium and discount, right? So from this low to that high, this is the midpoint of this move. This is the midpoint, and this part of the price action is called premium. This part of the price action is called discount. So price went up, came back down, and it's coming to mitigate a PD array that's in the discount area of price action. So that is what I mean when I say we have mitigated discount. This is a great, in short, what I'm trying to say is that this is a great area to buy price. Cool. Alright, let's continue. We go down to the daily time frame to look for something that supports our bias, to look for signs, signals, confirmations that support our bias. When we come down to the daily, this is the break of market structure right here, right? We have a break of market structure. Don't get it confused. We had the first break of market structure we had. This was the break of market structure right here. So the first break of market structure was this one. This was the first break of market structure, and behind that break of market structure we have this order block right here, which got mitigated by this price action. After we mitigated that, the high that created this low, the move that started it was this high. So once we had that break of market structure, we have this inverse fair value gap. We have this inverse fair value gap. After we broke this break of market structure, price came back down to mitigate this inverse fair value gap. Then it went up. Then we had another break of market structure right here, and this break of market structure left the inverse fair value gap as well. This inverse fair value gap right here got mitigated right here, so that's supporting our bias, right? This is supporting our bias. So once we come down here, we have another break of market structure right here. This is the first break of market structure, and if we look at that, we see we have a fair value gap down here. So Alright, so cool. We have this break of market structure, that break of market structure, then we have this fair value gap. So what I see is price is going to mitigate. Alright, so the break of market structure is right here. Break of market structure is to the downside. We have a fair value gap right here. So what I see is price is going to mitigate this fair value gap, then come back down, mitigate this fair value gap, then continue high type shit. We mitigate the premium, come to the discount, head higher. That's the daily time frame though. So from the daily time frame, we go down to the 4 hour. And mind you, on the daily time frame, we can see we have this big bullish candle. This was Monday's trading candlestick. Today is Tuesday, right? Yesterday was Monday. This is Monday's price action. So today is likely to continue in the same direction, which is high. But market open right here, Judah swing heading high. That's what I see, and I figure this is a good time to buy because I see signs of a bullish momentum. Alright, so that fair value gap on the daily is most likely higher than this level, so I expect price to come to these equal highs, this high and this high. We call those relative equal highs. Retail traders look at this level and think, oh, we have a double top, and hence this is like what do you call resistance. But in actual reality, the market makers look at this as liquidity. So that is what I mean by liquidity. We're going to purge these levels, and my interest is to capitalize on the move. So this price action, let's analyze this price action right here. We see we had our first break of market structure right here. That break of market structure had this fair value gap, which we mitigated right here. After mitigating that, we have another break of market structure, which is that right there. And this break of market structure, obviously we have an order block in here, which is being mitigated, which has been mitigated right now, and we have its consequent encroachment already mitigated halfway of the order block. That's the consequent encroachment. That is what has been mitigated right here. That is what has been mitigated right there. So we go down to the 4 hour, or to the 1 hour, sorry. And on the 1 hour, you can see clear as day that we are buying, and I can feel the blood rush in my body. Break of market structure, clear as day. Fair value gap mitigation, clear as day. Order block, we have mitigated the order block right here. So for those that are, I don't know, want to trade one is to one, what do you call, risk to reward 1%, looking for 1%, you can put your entry right here and put your TP right there and wait to see the magic. The stop loss, you put it right down here. That is your stop loss placement below the low of this order block. So let me just mark it, order block. So we mitigated that. That's what's happened here, and we put our stop loss right there. Our high, our TP right just below this high, because that is the high I was telling you about, right? Current interval only. On the 1 hour we can do that. Come down to the 15 minute, we can have oh, actually let me go back to the 1 hour. The way it is right now, right, we can put our stop loss right here below this low and have 1.5%, right? Put our stop loss right there. Or if you want to be safe, if you just want to be safe, right, put your stop loss right there, 1-to-1, easy. Go down to the 15 minute. We see, I don't want to see this 1 hour order block on the 15 minutes, so go down to the 15 minute. So on the 15 minute time frame, we see our break of market structure right here, break of market structure, right? Then obviously have this fair value gap, but it got mitigated here, so it got mitigated right there, right? But don't forget, swing lows are liquidity, and that is what we swept. Right, so we can go off of liquidity, or we can go off of this order block, which means price still has the potential or the likelihood to come back down and mitigate this order block before going high. So what I mean is, it can do this or it can do this. So those are the two possibilities I'm looking at right now. So on the 15 minute, since we have already mitigated that and we assume this is our lowest low, At this point, have a break of market structure right there, and then have a order block right there. So that's a great entry. 15 MOB, and the way it is right there, would have a stop loss right here, which would be our entry on the order block, on the 15-minute order block. The stop loss just below the swing low, and we have our TP just below there. So that is a 1 to 5 risk to reward trade set up 15 minutes, right? And I like the 15 minutes because it is more reliable than the other time frames. Go down to the 5-minute just to see clearly if we can. Alright, so we have this order block on the 5-minute as well, have this break of market structure, and that. Alright, so I like this move as well. I like it. So this is what I'm going to watch, even though on the 1 hour I have alright, so let me do this. On the 1 hour we have this 1 to 1. On the 15-minute we have this 1 to 5. Let's get it.
And remember, in forex we're talking about money. We came in this game for money. We came in this game to earn a living. So we are not here to play games.